So these webinar series are recorded here, and I'll show you that in just a minute here. But all week long we're going to be presenting professional traders here, and they're going to show what their trading methodologies are, and then how they look at the book and how they use Bookmap to give insight at their levels of interest. Right. So today we have Mete Topcuoglu, and he is an oil trader, and you can see here the introduction. Started trading options back in 2009 with the help of a Wall Street veteran, and then through various courses, and it looks like one especially here offered from Compass FX with Ray DeMedici in 2014, was able to focus on a single market, and he chose crude. So that's what he's looking at today, and he's a day trader. Okay, so we'll take a look at what he has to offer or say about his trading levels, and then how he looks at Bookmap at those specific levels. Okay, so let's see here. If you guys want to give Bookmap a try, this is where you can find it under pricing at bookmap.com. Okay, there's a free trial here. It's 14 days, free access, and it offers you the a fully featured version. Here's the advanced version, as you can see right here. And then after that free trial, you have two different options. Okay, you have the basic and the advanced. It's $49 per month for the basic and $99 per month for the advanced. They are billed quarterly, so please note that. And the main difference between these two versions here is these add-ons that you can see here. Okay, so there's a host of add-ons for the advanced version, and the ability to trade right from the chart. Okay, that is especially enhanced now with the new Bookmap version, Beta 5.0, because we have automated trading strategies as well as an indicator panel. All right, so all right, that's the background on Bookmap, where you can find it. Custom solutions for props, prop shops and quants. Contact us here. Let me show you where all the recordings are, and then we'll get to Mete. All right, so all the recordings, you'll be a member. You need to be a member here. Come into the members area, and then under this education tab, you'll see all the recorded webinars and live events here. And just click on that link. It'll pop up. Okay, and you can see this is the one from Friday. All right, so all week long, I'll be adding these to this list here. The playlist is in the upper left-hand corner. So click on the playlist here. Okay, and then you see the drop down here, and you'll have access to all of the pre-recorded webinars here. Okay, so that's where you can find these webinars. All right. Okay, so other than that, Mete, very happy to have you. So I guess I'll just hand it right over to you, and you can take it away.
Okay, thanks a lot, Bruce.
Okay. Do you see it, Mete?
I clicked on show my screen, but I'm not sure which screen I'm showing. Do you guys see the Bookmap?
Not yet. So I handed over the presentation to you from GoToWebinar.
Yeah, I clicked on show my screen.
There you go. Okay, coming in loud and clear. I'll tune out, and if any questions, Mete, then I will, please everyone get them in, and I'm just going to ask Mete and interject within his presentation here. Okay?
Okay, so my screen is showing, right? The Bookmap and the Sierra charts on the right-hand side?
Good to go.
Okay.
All right.
So, hello everyone. Thanks for joining, and I'd really like to have your questions, because I think having an interactive presentation is more sound, because At this time of the day, we had a substantial move down on crude. I mean, I don't want to get short at this level, and seems like it's even if we bounce today, it's not going to be too much. So I don't want to get involved, unless I see something clear. Many times when London starts, this is London session start here in this little box. And this blue line is the pit session close from Friday. You see many days where price tries to go above and then doesn't find any interest and starts to sell off. So it was bearish from the get-go of London, and then we have some intermediate action here. And this candle here is when the pit session started, this big one. So until then, since then we've been selling off with some measly bounce around the 53 handle, and now they took out all of that. So this is all nice and dandy. How does Bookmap help you with all that? First of all, I'm using Bookmap since last year March, and I've been looking at it with crude oil every single day, and I believe it presents a clear advantage to get into certain trades and sometimes keep in the trades, because crude oil is, when you compare it to other markets, might be very volatile, and you see action on both sides. It doesn't mean that if it's bearish you just get short and forget about it. Sometimes you can play both sides of the market. Some people are very comfortable with fading. Some are more comfortable with holding on to a position, even if it's during the day. They're more like swing trader type of traders. But what I find very useful with Bookmap is, you see these white lines. They're all limit orders sitting on certain levels. Sometimes you think, okay, that level is going to be defended, so I can get long there. But as Bruce pointed out in the beginning of the presentation, excuse me, the add-ons, what I find are most useful, because here's this thing called book imbalance and volume imbalance. When you see a plus sign in front of the percentage, that's telling you that more trades are getting hit on the bid side, and as long as that is the case, you shouldn't get long this market. And the volume, when it's negative, it's telling you that more selling pressure is happening on the market. So when you see this book imbalance pointing down and you see certain levels, 90% of the time they get taken out. And the thicker the level, the more time it spans before it takes it out, and then you see an immediate bounce. Like when it happened, it took out 53 because there was like 360 lots sitting until they took this level out, and then it spent some time here and then went down to this level, which was 93. There was also 260 lots sitting there, and then it showed some bounce, but it couldn't rotate above 04, which was this candle here. So when you see that, you can get short again. I mean, sometimes when a certain level, you see a very thick liquidity, and then price comes maybe 1 or 2 ticks and doesn't touch it, and then they take price away from it. Those are the times when you can fade it very confidently. You can just get involved on the long side and then put your stop 1 tick behind that thick level. So that's one of the safest ways to fade. If that doesn't happen, you have to wait until that level is taken out. Like this one, the big red dot tells you that selling pressure, and then it keeps going till 79, and then we see a bounce. That's the low for the day, which is sitting at 77. But what follows afterwards is keeping me from getting long, because if you look at this, this is 10,000 contracts on a 5-minute candle. What happens afterwards is we don't have any follow through. The volume dries out, and we don't have a bounce. Usually when it's going to turn, this volume is followed by first a subsiding volume, and then when they take in intermediate SR like this, you see an uptick in volume, that's when you can get involved on the reversal trade. So until I see that this is still, you know, downward pressure or some profit taking, they're going to maybe hit the 25 or pit session from the previous day, pit close, this 52.98. And just looking at Bookmap is just giving you so much insight in what's going on, which I find very, invaluable. In the retail space, we didn't used to have tools like that, and we always heard about the, you know, mythical book of the big boys, or, you know, large lot traders and everything. And now with this, we see what's going on inside the market, because yeah, you can have all kinds of indicators or any sort of intrinsics to give you the bigger picture of what's happening in the markets. But when it comes to trading and getting involved in the markets, being able to read order flow is the most important thing, I think, because I used to trade crude with 30, 40 tick stops. Now my stops are 6 or 7 ticks most, and that keeps you safe. You can lose a couple times in a row and it doesn't hurt you. One nice trade in crude oil, because it's a moving market, can make it all up with some change. So I find it very useful to give you this, you know, correct spots to get involved and correct site to get involved. And then even if when I'm wrong, I'm just paying up $70 per contract, which is nothing.
Yep, Mete, I got a few questions already.
Okay.
So,
Interesting.
sure. Well, just maybe a review of what you just talked about, looking for your imbalances there, and
okay.
Looking for the positive figure about in the book there, I guess, yeah, that'll take care of a few of the different questions here.
Okay. Let me just give you an example with the DOM here. So this is the price ladder. Just for hypothetical speaking, let's say the crude oil market is composed of only 2 traders. Let's say ExxonMobil is a seller here, trying to sell at 53.08, and they put a limit order. And let's say Merrill Lynch is here at 52.74, and they're the buyer. If I would ask, what is the price of the market? There's no price in the market right now, because there are only 2 players. One is keen to sell at this level and is not going to sell any cheaper, and the other guy is keen to buy at this level. We only have a market when a very aggressive guy who thinks price is going to fly off the charts, so he hits buy market order here. As soon as he hits buy market, what's going to happen is price is going to be at 53.08, because that's the only limit order sitting in the market. And as soon as he hits buy market, that's where the order is going to get executed. So for our hypothetical example, let's say we have 5 orders sitting here. So in order for price to print 53.09, and let's say there's 1 sitting there, we need 5 aggressive buy market orders to take care of these 08s, and then the next time somebody hits buy market, that's going to be executed at 09. So that's how price moves. So what this order book imbalance is telling us, when it's a plus sign, it is just the opposite of what's happening here. Let's say there are like 5 lots sitting at 74, 2 sitting at 73, and 1 sitting at 72. So in order for price to print 52.71, somebody has to come and hit sell market 5 times to take out this level, 2 times to take out this level, and 1 time to take out this level. So when it's on the, of course, in a real market, we're having limit orders filled up all levels, and buy markets and sell markets are hitting the market constantly. But what is this one is telling us, that when it's plus, more trades are taking place on the sell market side, and they're filling orders on the buy limits. and that's a bearish pressure. Until that pressure is taken out of the market, it's going to keep bouncing, and then it's going to keep trying to figure out the next level down. That's what it's telling us. And the volume is exactly the difference between the two sides. So when it's minus, it's telling us that more selling pressure is taking place in the market than buying pressure. And also here, these cumulative delta bars is the difference between the aggressive sell orders and aggressive buy orders. And as Bruce is going to tell you, the new version, I'm using the old version of Bookmap right now. But the new version has a cumulative delta printed on the chart. On the, it shows as it depicts it as a line, and you see this presentation of bars as a line underneath. So it's telling you which side is also having more pressure on the, book, in short. So when you have here, for example, price is trying to bounce. We're looking at cumulative delta, but as you see, there's not. Look at this candle here. Big volume bar. It's coming down, and the delta is clearly bearish. But what follows is, we're having some green bars, and we have positive delta, but they're just measly in comparison to these two bars. So that's why market is not able to take out this level and make a run upside.
Okay. Yeah, that answers a question there also about cumulative delta.
Cumulative delta, I want to point out something. When it's very helpful, when you see a divergence, for example, here, price is making a high, delta is making a high, and the next bar is green, delta is positive, and now we have sideways action and downward pressure. So as long as you see this downward pressure, you know that this area here is not going to bounce, and it's going to give way to the downside, and which follows through. The most, you get use of delta is like this here. Price started its fall from here, and this is the delta that took price at pit open from 53.45 to 19s, 20s. And what follows is, in this sequence, we have upwards delta, and what happens is, if I take my trend line and I put it here, you see that there's higher delta happening. And what happens to price? It doesn't do anything. So all this pressure is not able to move price. So what's going to follow is more pressure downwards.
Okay. So let's see here. A few more questions. They're just flowing in. Let's see. All right. Yeah, we went over the cumulative volume delta. Can Bookmap be added to Sierra charts? Garnett, no. You can connect Bookmap a variety of different ways, but anyway.
Yeah. Well, to answer that question, Bookmap is a standalone platform, but I'm using the same data, transact data, both on my Sierra charts and both on my Bookmap. So I don't have to pay extra for data charges, because that's another additional cost per month. So you want to avoid them as much as possible, and there's a good thing that Bookmap allows me to use my original data, so I don't have to worry about data feeds.
Okay.
That's the advantage with Bookmap.
Okay. Let's see.
When it comes to tick data, time data, Bookmap is just a nanoseconds flying thingy. It doesn't, cut like candles. So it's flowing in nanoseconds. If you want to dial into what's happening in the market, Bruce is the master of that. You can see every single trade taking place in nanoseconds. If you look at the time flowing underneath, it's just constantly flowing. So it's not like regular candle charts or anything. It doesn't do that. It's just the total flow of it. Because the good thing about Bookmap is they used to serve the prop and the big firms before they were available for retail, and they get the data flow of the orders from the base of it. So it's unadulterated. It's just flowing to you, unlike any other platform.
Yeah, yeah, that's a great explanation of it. I mean, we're not tick based, we're not rotational based. It's just you know, as soon as it comes in through your data feed, and it is based on your data feed. That's how we're getting the data, and we're plotting it. As it comes through your data feed into the platform, we're plotting it, and you can zoom into these levels, basically unlimited zoom down to billions or trillions of seconds, if you can get that. Let's see here. A lot of questions, Mete, on your settings. So I guess a heat map and volume dot settings that you're using there.
Volume dots. I have a minimum accountable pixel volume of 50. That's how I started to use it, and because anything less, you have too many dots. Anything more, you have. I mean, I'm comfortable with this. You can always change the circle sizes, transparency, and you know, you can set whatever volume to be shown as a dot here. I like 50 trace to be printed. And what else? Volume mask doesn't have anything.
Your heat map settings?
This is the large and heat map.
Yeah, I think maybe more on the contrast configurations up above there.
Yeah, here. Contrast is 50 and brightness is close to 0, because I like anything about 100 to be white and everything else adjusted accordingly, because you know, when the highest level here is 100, it's going to be white. When it hits 211, like this level, it's the white one, and the rest gets you know, shaded out accordingly. Otherwise, it just becomes, the whole thing becomes white, and just I don't like it that way. I just want to see the significant levels at a glance. Right now, I see that 75 is a significant level here, and that's where we bounced before, and looks like price is staying here. It's not able to rotate above this, you know, immediate SR level at 91. So unless they can go above the handle, I'm pretty positive they're going to test, you know, below this level as soon as, you know, crude oil after it opens reacts every half hour. So in 4 minutes, London is going to go home, and many days you get a nice move right after London closes, and you almost always have a big volume bar at the pit close, which is 225 New York candle. It almost always is a big candle with big volume on it.
Okay, so Mete, do you usually use market or limit orders?
I try to, you know, when I want to get involved, I use the DOM, and I don't hit buy market, sell market. I usually, if I'm going to go long, I try to get involved here. Just try to get involved with the price, and sometimes if it runs away, just chase by one tick, 1 or 2 ticks. And when I'm taking profits, sometimes I hit sell market if it's, you know, I'm going to close one lot and keep the rest. And when if it moves really fast, and sometimes it's very volatile, and I want to keep everything, I just hit the flatten button, and it just flats me out.
Okay, so I guess that question is also kind of wrapped with your kind of entry and exit strategies.
Yeah. Well, for example, right now, nowadays, crude oil has a range of around, I always look in the morning to a 30-minute chart, 1-hour chart, to see where some certain, you know, levels are, the pivot points, the market profile, to see what's going to happen. And Crude oil has a range of around like 130 ticks lately. That's, I mean, it's not set in stone, but you know, under 12 seems like that's the, it's put in the range for today. This was the demand came in on London on Friday when OPEC news hit by EIA. They said that, you know, OPEC compliance was above expectancies, and as soon as that news hit the wires, we had an outlier candle in London. Usually it doesn't happen. Like, we had a 50-tick candle. So this is where the move on Friday started, and right now we've dipped below it, and looks like we're finding some buyers. Those kind of levels, when, you know, price starts a big move, are always important to see what's going to happen when they dip below it. Are they going to keep going, or is it going to be a place where they reverse the market? And when I'm looking at the range from Asian session all the way down here, we see that we've moved 112 ticks. So might be the range for the day. And if that is the case, what's going to happen most probably is we're going to see a, you know, slight bounce to somewhere around this range here, and then finish the day off. It's not going to take out the highs and fly off the charts. I mean, unless somebody comes out and says, you know, a war has broken out, or, you know, Saudi Arabian oil minister, you know, blurred something out that's very bullish, or somebody comes out and says extremely bearish, then we can see price all the way down here. But on normal cases, that's what's going to happen, because it's made its run, and maybe it's going to bounce somewhere around here, and it's going to be the day.
Okay. Let's see.
See, now this level is very important. I'm glad that we got this. 93 is 486 lots, and that guy just removed that orders. When you see something like that, when somebody starts throwing 500 lots, because that's a single guy, he's just throwing it off and then, you know, putting it there and then taking it off, putting it there, taking it off. It usually is telling you something. You know, they're trying to do something. They're either trying to induce people to go long so that they can go short, or they're just pressing the market to take out this level here. So when you see something like that, you just have to just watch what's going on, and if you're not in the trades, most of the time just stay away, because you don't want to get involved in the fight of those guys, because they have unlimited resources compared to a retail guy. So it's always prudent to see what's happening, what their intentions are. And without Bookmap, there's no way you can see this. I mean, this is very interesting. I mean, a guy just flashed 500 lots and he removed it, and all of a sudden price started moving down. So I don't see any other way, if you're not in the prop desk or working for a bank, how you can see this information. This is what absolutely makes Bookmap invaluable in my eyes.
All right. Well, that just answered about 3 or 4 questions there right off the bat.
And people might be wondering what this purple line is. There's this feature I like a lot about them, Sierra charts. Draw volume profile, you can put it on a single candle. So whenever there's a big candle printed, I take it off and put it on, and this is the POC of this single candle. And if you just extend it to engulf the rest, you see that this area is 88, is the POC of this whole range. So whenever price comes to 88, POC is point of control, which means buyers and sellers are both comfortable buying and selling at that price. That's why price, you know, touches it and comes back to it. So as long as it stays away here, you don't take a trade. Whichever side is going to win, then you can get involved in that and just put your stop behind the, you know, POC to be safe. So right now, as you see, there's some buying action here, and then it immediately turns to selling pressure, and then it's not happening. I mean, it's just not able to leave this area until it does it decisively. It looks like after that guy flashed in 500 lots, now the selling pressure is mounting. But we have to see this 81 and 76 taken out. Is there anything that, yeah, 82 is kind of thick, but this area all the way down from 77 to 70, we have about like 1,000 lots sitting, so it's going to be a tough nut to crack. But if they attack it, we might see price move quick 20 ticks down in a flash. But right now, booking balance is showing negative and volume is negative, so it's indecision on the book side as well. If this negative was followed by positive volume, then I could think of, okay, buying pressure is mounting now, so we're going to see a bounce. But this is indecision on book as well.
Mete, could you show the? They're asking about the settings you have for the book and volume and balance.
Sure. It's just personal preference. I mean, there's no right or wrong.
So the order book and balance and volume and balance.
I think they're set. It's not. I'm not able to change them.
You can if you click the.
This one here.
Yeah.
Yeah. Okay. I don't want to mess with them. I'm so used to what it tells me. So if I change something and it starts telling me a different story, I don't want to go over learning it all over again.
Okay. Let's see here. Yeah, a request to go over maybe a previous trade of what you looked at, or I think before we go into something like that, I mean, you're seeing some pretty interesting price action at the moment, and there's some questions about how you determine and make the distinction between fake limit orders and real ones.
Well, when they start flashing a level with 500 lots and then immediately remove it, that's fake. But when you, for example, this 72 guy, 259, it hasn't changed. So that seems to me that's a real order. I mean, because that number is sitting there for a long time. And the same can be said with 71 and 70 level as well. But here, a couple of minutes ago, we had 91, 92. Somebody flashed 500 lots and then immediately took them off. So that's manipulation. And also this 53 level has 205. It's sitting there. Usually, if you look at it, every 5 minutes, doesn't matter. You have to just, look to the screen. But certain levels, crude oil always reacts at handles and half prices in many cases. And what we found, top class, when they take out a handle, the first stop is usually the 80 level to the downside. And as you see, it's just reacting here. And when they take a level out to the top side, 20s and 25s is usually the first reaction point. And other than that, 50s and handles are always important. So if you see like this at a handle 205, after they came down here, they tapped 53.02, and then they handled one tick. They front ran it, and what happened is they could only print 23. So the next time around, 04 bounced, and this is the main IMA, and they took out the level. So what happens is afterwards, they put a level to the top. So it's going to be a tough nut to crack to print above 53 and accept. They have to take out this price because this is put after it was taken out. See, this is the action when they took out 50 to 90, and it was a fast move down. And you see that this order has been placed after it printed 78. So whoever it is, whoever they are, they're just waiting for price to come back to 53. So I'm guessing they want to get short. They don't want to get short here. They just want to, slight pullback to get short. Is how I'm looking at it right now. Because there's no way to know what's going to happen next in the markets. I mean, nobody can do that. Instead of, anticipating, I like to participate because that way you don't have to guess anything. You just look for reactions. I mean, many times when there's very thick liquidity level and they take it out with big volume and that it immediately comes back above that level, it's an indication that that level is going to hold, and they trap sellers at that level and they take price away immediately, and then you can fade that. But if they take a level and then it keeps going down and then pullback does not go above that level, it's an indication that the price is going to continue down. So you can add more. I mean, scaling in and out of trades is the way to maximize a run. I mean, if you scale in and out at the correct places, you know, within a range of 50 ticks, you can easily get more than 100 ticks. That's how you can do it, you know, just looking at what's happening at certain levels. The reaction tells you if it's going to keep going or if it's done.
Okay, let's see here. A couple questions about the ES. Do you look at the ES and do you trade it? And if so, is it different than how you look at oil?
Yes. I mean, when I first got Bookmap, I tried to figure it out, but honestly, you know, ES is in my opinion, ES is the toughest market in the world. It's the most, you know, algo-based, HFT-based, whatever you want to call it. And when you see on Bookmap, for example, in crude oil, I can make a sense of what they want to do. For example, right now, book turned to minus and volume is positive, so this might finally be a bounce out of the bottom. But ES is such a thick market. This 500 lot guy comes in again, and then he flashes and gets off, and here's again. So he's coming in and out of the market at 93. ES is such a thick market. Every level has around like 400 lots sitting on top and 400 lots sitting on, you know, below the level. So it's just, I couldn't. I mean, I didn't spend time as much as I spent with crude oil. So I cannot tell you how to make use of it to your advantage on the ES market. If I said how I mean, I knew what to do with it, that wouldn't be correct.
Mete, what about volume? How do you, I know that you filter your volume looking for those dots to be comprised of 50 or greater, but are there any other ways that that you integrate your volume analysis in Bookmap with the heat
map? I also have something called better volume, and these colors, for example, this one is, you know, high volume churn. That means the volume on this candle is both ways, but this one is, you know, just selling pressure. If it was a big up candle, it would be green. So what happens is, you know, this huge candle with big volume, what happens afterwards? You know, there's no follow through. That's why it's not keeping down. So that's also how I get a heads up of what's happening here. For example, get your you know, trend line and put it here. You want to see an uptick in volume to see what's going to happen, either up or down, doesn't matter. I mean, if this is going to be a meaningful bounce, volume has to come out of here. You need to print higher volume. Even if it's going to go down, the same thing needs to happen. If it comes and tests here and volume doesn't come above this average area, I wouldn't pay too much attention to that move. And of course, the same thing is happening here. You see where, you know, certain things, and when they take out the level, and these big dots is telling you that there's big volume, because that's when it's dropped from 90 all the way down to 77. It happened almost in an instant. It seems like it took 5 minutes, but if you look at the book, it just took maybe less than a minute. So this is how big volume happens in the minutiae of things. So it's not just the dots or the sizes of the dots, and but how much volume is printed on a 5-minute chart. Because for crude oil, I know that you know, in the U.S. session, every, decent volume is 5,000 contracts per candle. If you see something like 12,000 on a single candle, it's big volume. Same here. 10,000 is big volume. It's above average. For example, on Wednesdays when the inventory numbers come out, usually the first 5-minute candle prints between 20 to 30,000 contracts on 5 minutes. So that's huge volume for crude oil. So, you need to see also the size of the volume in 5 minutes to decide if it's going to be a meaningful reversal or not. So this drop happened on 11,000 contracts, but we didn't have any follow-through. So either these guys were also taking profits or, something like that, and it met with buying pressure. That's why it didn't continue down. Or now, since we started this webinar, what's the range? 79 to 95, 16-tick range. I mean, for crude oil, this is nothing. So right now, the market is dead. I mean, for about 45 minutes, it's moved only 16 ticks. I mean, it can move 30 ticks in one 5-minute candle. So when you see this range-bound situation, that's the time to stay away. And now this guy is just dropped to, maybe this is another guy. He started to put the orders under the price. He was putting it on top. Maybe he got some longs, and we see delta pressure. Volume is upticking. And we're above the POC, so it might be a, you can go long here and put your stop at 87. It might be a try. I mean, I'm not used to trading this hour of the day because it's approaching 8 p.m. my time. I'm usually done about an hour ago, so I'm not familiar with what happens at this time of the day, to be honest. I'm used to London and early US sessions.
Yeah. Okay. But in general, it looks like, so, I mean, you're looking at your higher time frames there. You're looking at your 5-minute chart for the volume. You have your other ways of looking at the chart that you covered. And then you're looking at Bookmap, you're looking at some of the imbalances there. And then you're looking at and getting a feel of the auction with the high liquidity.
One of the safest ways to enter a trade with Bookmap is, for example, we don't have that picture here right now, but sometimes, when price goes to a level, okay, and then you see a big dot, and then you see a slight pullback, price comes to the same level, but there are no dots on it. I mean, just get involved in those. I mean, the stop is going to be 2-3 ticks, and if you lose, you're going to just lose 3 ticks, but they're just perfect opportunities to get involved in exhaustion. I mean, there are many textbooks on what is exhaustion and stuff like that. I mean, you spot it immediately because they come to a level, you see big volume, big interest, slight pullback, couple ticks, and then next time price comes there, maybe 1 tick below, you just see the line here, bid-ask line, nothing on it, and then it starts to pull back. If you short that, for example, after a try like this, worst case scenario, you're gonna get 10 ticks out of it. I mean, there's no other way to see this. I mean, many times, for example, this last test of 83, it was here. See the, how the volume decreased at this level. There's no interest. I mean, if this was gonna go lower than this level had to be taken out on the second try, and we would be seeing a bigger red dot here. So the second time it came here and couldn't do anything, and there was no interest, and then as soon as they started to print this, I mean, if I wasn't talking and trying to explain things, I would be long at this level and put my stop at 82. Probably long at 87. With a 5-tick stop, would be on it.
All right, there you go. Real-time setup right in front of us.
Yeah, this was a great setup. See, I mean, this looks like, trap buyers. They can rotate market higher, and then it comes back. What happens is this was a level that was bought before, 83, and they came to that level, and what happens? Volume subsides, and then immediately buyers take over. So one thing about this, which is 86, 87, you can take a long and put your stop at 82. So 5-tick stop, long trade. And here we have the 25 EMA coinciding with the pit stop, pit close level from Thursday. So might be a tough nut to crack, but what happens is usually either it's going to fade here or take it out and tap it and then go.
Okay.
The only thing missing on this up move is the volume. Volume is drying out.
Yeah, right into the figure there.
Yeah, the figure is going to be problematic. If they're going to take it out, we have to see some big yellow dots now, and then upward thrust. Or if it's not happening, they printed 99, and now they're pulling price. And this is happening on low volume, so it looks like a low volume tap. 235 lots. This guy's sitting here. It didn't change the order. It's just I've been looking at 230 since here, and now he starts to press down. Try to backfill. I mean, we should have this webinar sometime right on pit open, and then we can see all the fun and the fireworks. That's when all the fun happens on the US session.
Yeah, it gets a lot more fickle a bit later. So let's see. You're in Turkey. Is that right, Mete?
Yeah, Istanbul, Turkey.
Exactly. Okay. All right. Good questions about your data feed and Transact and from Turkey.
Yeah, I have a 100 megabit hardline fiber optic connection, so it doesn't seem to be a problem to take orders through CME. Thanks to technology, when it works, it's great.
A few different questions just coming in now about average stop and target and how many trades per day. That type of.
Well, I would say my average day, depending on the market situation, I average between 10 to 20 trades. But if you consider the multiple lots, scale ins and outs, I average between 30, 40 lots per day. It just depends on the day. Sometimes, the market is smooth. You just get involved. Being able to trade London is a big advantage. Many days on crude oil, especially on Mondays, you get a clean move out of London. Not today. And then it just moves a bit, makes another leg down, moves a bit, makes another leg down, and those are easy to get involved. I always start with a single lot, always, because that way I can just get out of the trade with 6 or 7 tick loss, and which is nothing when you compare it to how much it moves. I don't have specific targets when I get into a trade, but I try to add to my winners, and then as soon as I add the second lot, I don't give it much breathing room. Usually either break even or break even -1 or 2. So keeping it, again, my maximum risk to 6, 7 ticks. And when the average price or the first lot reaches anywhere to 20 to 30 ticks and I see a reaction, I cover one and then put the rest on break even to see if it's going to continue. And if it has a pullback and then it keeps going in the original direction, then I add again. And as soon as I add, I put the stop at break even. I don't give it anything back. I always add the winners, and then once I get my initial risk off the table, I don't want to risk anything else. And I just try to run it as much as I can. For example, here, it was a good reaction on high volume, and then the next candle engulfs the, stopping volume, and this is the inventory area from the previous week. I get the DBP tool. It's again from our prop room friends, figured it out. The first half hour of the inventory levels, you get the DBP, put it on, and then you just mark the area and put the POC. Many times they react to that. This is previous weeks because it's brown. Last week's, let's see where it is. It should be underneath. It's the blue one here from last week. I divided it into. So usually these levels react. So if, when you get a short here, when you see this reaction, I'm out of this trade. And then, this one, I was in here and I saw this reaction, I was out again. So no specific targets, just to see where price is reacting at a level, what's happening, if it's going to turn or not, that kind of thing. But I like to take profits on slight pullbacks, and then, for example, this was a perfect example. Short here, take some profits here, put your trend line. When it breaks it, add again, and keep riding it. Take some profits here. Put your trend line, add some more, and get out of the whole thing here. So within a range of, let's say you got short here, got out here, 44 ticks, it's easily, you can get 70 ticks out of this run by doing that. And the risk would be only 7, 8 ticks maximum initial, that's it. And as you see, 53, it's just dried out, it's not happening, it's not going up. And probably in the next 4 or 5 minutes, I don't know. I don't trade this time of the day, so I cannot tell you what's going to happen.
Okay, let's see here. About your better volume indicator, custom indicator in Sierra charts.
Yeah, it's available in Sierra charts, but I think you can find it on for almost any platform on the internet if you search. It's just a volume indicator, just giving you different colors, which gives you a heads up. I like to see different colors to see what's happening. I mean, I'm used to it now, so.
Okay. Some questions about any sort of trade groups, Skype, trade rooms, anything like this?
Yeah, we have a wonderful Skype, group. All were prop class members from Compass Effects. We have a member group that we share ideas, everything, So other than that, I'm not in any groups. But those are people who have the same education and knowledge, so we all know what we're talking about,
Okay, so that's
if they want to learn more about that, they should contact Compass Effects. Can't talk more about that.
Okay, I'll put that in the chat here. Just a minute.
Yeah, they tell them contact Kim at compassfx.com.
Okay.
Because they have I'm sure everybody who's been in the retail space had some, people who are just traders. Teachers, not traders, because people in the know are busy making money. They don't teach. And a lot of people try their hands on trading and then they fail and they become teachers. I'm sure you guys ran into them. And Ray from Compass is the one and only guy I've seen to be a real trader. The first month of coaching he gave us, nobody understood what he was talking about because he thought we all knew what he was talking about, and then he had to dial down next month to retail space. He's the only guy I know, who's a real trader and who tried to teach it to us. So that's the address if you guys want to learn the ins and outs of this market.
Okay.
Every single market, because they all work the same.
Okay. So no, I inputted the contact data there, Kim at
Okay.
Compass FX, and then the Compass website there. So if
All right.
you guys are interested, let's see. Yeah, Sander, you can vouch for that about his raise trading. I can as well. Pretty amazing stuff. Pretty amazing. All right, well, let's see. A few more questions here, and then we've been going for about an hour. I think we'll wrap it up here. Let's
Yeah,
see.
well, Bruce, I'm hungry. I want to go home.
Yeah, it's late your time.
Yeah,
Um,
8 p.m. I'm
yeah,
starving.
yeah, definitely. Let's see. Okay. Do you want to? There's a lot of questions here, and maybe we'll put your email in if or your contact information as well.
Yeah, you can do that.
Okay. I don't know which one. If you want to input that into the chat there.
You want me to? Okay.
Yeah, that might be
Let me-
easiest.
Is that it? Yep.
All right. There we go. Yeah. Hold on just a minute here. Okay. It's taking a while here, and I don't know why. Okay. There we go. I got it now. Okay.
Yeah, it
There you
turned
go.
out to be a nice short at 98. Two taps at 99. They couldn't print 53, and this guy removed the order, and now we're pulling down, and it's going to be a goner now.
Yeah, they just didn't want to take it on there at 53.
Yeah. I mean, as soon as 98 would be a nice entry.
Hmm.
Safe entry would be 93. Stop goes to 99. Again, 6-tick stop. If you wanted to wait for this level to be taken out to hit a mold, or just aggressive entry would be 98 with just 3 ticks.
All right. All right. Well, let's see. I think I got to most of your questions. There might be a few that I kind of just didn't get to, but
Well,
yeah.
Bruce, I mean, they can always write to me. I mean, I always like to chat with, fellow traders, because we're all in the same business and we've all been through the same stuff. I'm always, happy to talk to people, share whatever knowledge I have.
Okay. Okay. Great. Well, yeah. Thank you very much, Mete.
I thank you.
Really nice to see your process and especially like on the fly here. During the live market and what you're looking at and integrating like your higher time frames there and then looking at the book directly afterwards. What is it telling you?
Yeah, I mean, it's just that we're having a, slow day, and especially this range here is totally range bound, so we couldn't get involved in the market live. I would like to do that, but, as I said, there's nothing happening. And if in the future maybe we can have a webinar right on pit open so we can show the fireworks.
Okay. All right. Yeah. Well, let me run that by Sahi, and I'm sure he'd be game for doing that.
I mean, for crude oil, it's so much fun and so much action. Just an idea.
Yeah. Yeah. Okay. All right. Well, yeah. Thanks everybody for coming. Let me. I'm going to grab the presentation here and back from you, Mete, for just a moment.
Okay. Thank you very much, guys, for attending. I hope it was helpful.
Yeah.
Take care.
And for you guys that want to review this, I'll show you where the recording is going to be here. It's under the education tab at bookmap.com. Click on the link here. All right, that'll bring up the most current webinar that's recorded. So this will be up in about an hour or so. If you don't see it, or let's say tomorrow we'll have another webinar. Mete's will be one back. So it's in the playlist here. So click on that, and then you'll see it in the drop down here. All right. So it's in the upper left-hand corner, that playlist icon. Okay. All right, guys. Yeah. Thanks a lot, and thanks again, Mete. That was excellent.
Welcome. I thank you, Bruce.
Okay. Take care. Bye bye.
Bye bye.